Okay, guys, I'm going to take a look at the Nasdaq. We had a big bearish day today, and it started off fine, and the bulls were actually in control for the first 20 minutes or so, and then the bears just completely stepped in and ruined their day. So I'm sure a lot of people are wondering what's next. Well, let's take a look at the chart. Now, we've been trading in this channel in the Nasdaq for quite some time. I'd go back to May, June 2020 or so when we started forming this channel. And we've been trading in it for quite some time. Now, channels don't last forever, but they could last for quite some time. I personally think that we are going to break bearish out of this channel soon, and I'll tell you why as I get further into this video. So we topped out right around the top of the channel. We slightly broke it, I would say, and we had a big bearish reversal candlestick up here. And I would say this looks like a melt up to me. And I was posting about it on my Instagram. I posted on my feed about what a melt up is. I posted an article that I wrote, and I said, are we approaching the end of the 11-year bull market? And I posted on my stories and I said, that's a reversal on the Nasdaq, big bearish reversal candlestick. And it was. That was the day that it topped, at least for now. And we've been seeing a lot of bearish action since then. We saw bearish head and shoulders on the daily here, which broke bearish without any follow through, faked out to the downside, then back to the upside. We held this area as a resistance, set another lower high, then we broke to lower lows again, faked out to the downside, then we broke and faked out to the upside. So it was a lot of fake outs recently, a lot of tricks being played on traders as bulls defend the bull market. You know, there's a lot of bulls. They don't want the bull market to end. This is a battle. Remember, it's a battle between the bulls and the bears. And this is the bulls trying to defend the bull market, trying to defend the support, the channel, and the overall long-term uptrend. Now we're getting what looks like another bearish head and shoulders almost. We're getting a shoulder, a head, and starting to look like another shoulder might be forming over here. So we're really getting a lot of bearish action up here because we got a bearish head and shoulders, another maybe bearish head and shoulders, you know, and a lot of fake outs to the upside, big bearish reversal candlestick up here. So we're seeing a lot of bearish action up here and a lot of volume too. More volume than in the months prior. And if you know one of my strategies, high volume after longer term trends tends to signal reversals or temporary reversals. Now, this doesn't look like a volume climax or anything yet, which is an obvious sign of a top and a reversal. But we did get quite high volume near the highs up here for now. And we're seeing a lot of bearish action, a lot of bearish patterns. We look on the monthly, and we're seeing now 3 lower monthly highs and 3 lower monthly lows. Something we haven't seen in quite some time. Normally, we've been getting higher lows on the monthly almost since the COVID crash. We broke the pattern a few times, but now we've got 3 lower lows and 3 lower highs. That hasn't happened in a very long time. If we really look back since 2018, we haven't seen something like that. 2018 is when they started raising rates, and we got a big dip in the Nasdaq and in the markets, and then they decided to stop raising rates for whatever reason. I don't remember everything at the time, but that's in big part why we saw a big dip in 2018, is because they were starting to tick up the interest rates. So interest rates have a huge effect on the market. I'll probably make another video specifically about the interest rates and why they're so important and how they work. Well, you can see as the threat of rising rates comes in, we're seeing a lot of bearish action in the market. Now, some people are pointing towards Omicron, renewed lockdowns, maybe tensions with, Russia and Ukraine, the problems going on there, and other things as bearish catalysts and reasons as well, which they could all definitely play a part in why we're seeing some bearish action in the market. But personally, I think the interest rate is the number one factor. And I'm going to make another video dedicated specifically to that and explaining why it's so important. So I think that's the number one factor here and why we're starting to get a pullback. And I think lowering the rates to zero, or essentially zero, the Fed funded rate, is in big part why we saw this massive increase in the markets over the last few years, as they lowered rates to essentially zero, the overnight lending rate, and they printed so much money, so much stimulus. But now they're coming in and saying, hey, we caused a lot of inflation. We might need to raise rates. Not even might. They need to raise rates now pretty much. You see, for the last 10 years, they didn't really have to raise rates because inflation was low. How they deal with inflation is by raising rates. But inflation was low, so they never had to raise rates over the last 10 years. But now inflation is high. It's the highest in 40 years. So they might not have a choice but to raise interest rates. And this is where a big part of the problem comes in for the markets. It's because markets are fueled in big part on low interest rates and a lot of this money printing, which they're also planning to stop. And not only are they planning to cut down the money printing and the bond buying and the stimulus, the quantitative easing, but they're actually planning to do quantitative tightening too, which would be the first in over 10 years, which is reducing their balance sheet, selling off a lot of the bonds they've been purchasing, which again will contribute to rising interest rates. So a lot of big issues here in terms of the interest rate. It can cause a lot of problems. It's not something that it's like, it's bad news comes out, we price it in, and then the market goes right back up to all-time highs because who cares? Interest rates. I'm sorry, I have to sneeze. It's going to come later. Wait. Sorry about this. Not right now. Interest rates have a really big fundamental backing in the market. It's not something that you can just be like, oh, let's move on. It doesn't matter anymore. Bad news, okay, priced in, doesn't matter. No. Interest rates have a big fundamental backing in the market because there's so much debt in the market. There's so much debt that companies took on. There's so much margin that people are borrowing to invest in stocks. And a lot of these growth stocks, they need money to grow, or they're losing money still. They're not making money. So they need cheap money in order to fund expansion. Whereas if the price of money goes up in terms of interest rates, it could cause a lot of problem for growth stocks, which is why you're seeing a lot of growth stocks get punished while, more value stocks, they're doing okay right now. Look at Berkshire, look at the banks, look at the higher dividend plays. They're doing okay right now. Let's get to the charts. So we're looking at the Nasdaq, the QQQ. So again, high volume up here near these highs, seeing a lot of red flags, multiple bearish head and shoulders, multiple fake outs to the upside, a lot of tricks being played. Now we had this big flush down. We had another fake out, squeezed bears that went short on this move, squeezed them out of their positions because there was a lot of bad news. A lot of people went short, and you know what? The market likes to do the opposite of the majority. So a lot of people went short, then they squeezed a lot of people, then a lot of people probably went long, and then now they did the opposite. They like to play a lot of games. We tested this resistance area, I would say, and this resistance isn't super clear, but I would say I drew this line here because it was a support here. It was essentially the shoulder length area of this bearish head and shoulders. And I think it's a pretty big area to look at, which is why in part I think we topped out right around here. It's also about a 50% retracement from this down move. We did about a 50% retracement. Now we're seeing pretty big bear volume, increasing bear volume, but not enough of a spike to make me think it's bottomed yet. If we look on the futures, though, we might get a slight rebound tomorrow or a little bit of an inside bar, because as per my red line strategy, we're a little far from the red line, so we might get a slight rebound tomorrow, or kind of an inside bar is possible. Unless we do a big flush down and break this recent low, I don't think that's going to happen tomorrow. I think the bulls are once again going to try and defend the channel, the support trend line, and maybe we'll get a little bit of a bounce tomorrow. Although, if and I like to analyze things on the spot, in the day, in the morning. I went live today in my Discord, trading live with my group. My Discord is a paid Discord. You can access it through my website. I give out ideas, calls, analysis, lives, webinars, all kinds of stuff, in addition to my course that comes with it too. And it's a cheap one-time fee. So check that out if you like, on my website, 10baggerstocks.com. Anyway, so I went live this morning, and I was breaking it down for my people, and it's essentially analyzing on the spot and taking in the clues as they happen is the best when it comes to trading, and not assuming or hoping or speculating or gambling. All about sticking to an analysis, the charts, and sticking to your strategies. And that's what I did today, and I had a great day in the markets. I was having a crappy week earlier on, and that's because I was listening to my emotions, not to my strategies. I let my emotions overcome my trades, and it wasn't good in the beginning of the week, but I made a nice recovery today. And I went to cash before the end of the day, because you know what? How many times I held something overnight, I was green, and then I hold something overnight, and I wake up in the morning and I'm red, and I lost my profits and more. Because you never know what's going to happen overnight. So you know what? I made good money today. I cashed out my profits on my trades, and tomorrow's going to be another day to make more, hopefully, profitable trades with my group. So, looking for maybe a short-term bounce tomorrow, or a slight inside bar, potentially, unless we get a big flush down. It's possible. A clue of a big flush down for me would be if we gap up. If we gap up to like 381 or so on QQQ, then I would look at it as an opportunity to short. If we gap down, then I would look at it as an opportunity to maybe buy that gap down for a quick flip. Although I don't really like fighting the trend, and the trend is bearish, so I might not take calls. I'm doing options right now. I might not take calls, option calls, unless I feel really confident, because I don't like fighting upstream. And to me, we're in a downtrend right now, where you got a high, low, lower high. We haven't set a lower low yet, though, but now this is where I say we're in a downtrend, and what makes me concerned, and what makes me think the long-term bull market might be ending. It's this, first of all, this big melt up here. Okay, several reasons. First of all, the big melt up, the big bearish reversal candlestick was never able to pass that high, the high volume up here, multiple daily bearish head and shoulders, multiple fake outs to the upside, breaking the upward channel up here, really testing that lower channel over there. Now rejecting this resistance over here. If we look on the weekly, we got a RSI divergence on the weekly. We got a bearish MACD cross on the weekly. We're starting to get a converging MACD cross on the monthly, which we haven't in quite some time. Our RSI on the monthly is getting weak and diverging as well. So there's a monthly RSI divergence. Our MACD on the monthly is starting to show weakness and converge bearish for the first time since for the first time since 2018, and never converged bearish on the COVID crash. And now the biggest clue, the biggest thing for me is this right here, and I'm going to show you where we have over here. We have higher low, higher high. Then we pull back. We set a lower low. Sorry, we set a low. Then we set a lower high, a double top right here. And now we set a lower low on the weekly chart. So we got a high, low, lower high, lower low. Lower high, lower low on the weekly chart with the double top, with the high volume, with the clear, strong test of the lower support channel, with the rejection of the upper channel, with the multiple daily bearish head and shoulders, with the monthly bearish converging MACD cross. So I'm seeing a lot of red flags. And now there's a catalyst as well. Now there's a catalyst for, the Nasdaq to come down. And the catalyst is rising interest rates, So I would exercise some caution being a bull right now. Now, we have not had a weekly lower high, lower low for a long time. I look back, I can't even find a clear one for over 10 years. COVID never had. The COVID crash, there was never a lower high, lower low. It was just a straight flush. See right here? Straight flush. No lower high, lower low. It was just a straight flush down. Now, if you look back, we got our high, low, lower high, lower low. When's the last time this happened? High, low, lower high, higher low. Never set a lower low. Again, continued the uptrend. High, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, lower high, lower low. Key thing to look at. And if I look back, and I looked back, it hasn't happened in quite some time. Actually, perhaps 2018 maybe was the last time, and this is when they threatened to raise interest rates. I didn't take that in before, so that was the last time. But if you go back, and I looked far back, I don't see any really clear trend change in the pattern for quite some time. So this, to me, it's quite notable. Among the other signs, among the catalysts, I see some bearish red flags. So personally, right now, I lean bearish on the markets. Who knows for sure? The bulls have been very surprising in this bull market. They've been very strong. We've had a really strong bull market. And it's possible it continues. But the rising rates among the other bad news, but the other bad news is important. It's key. Omicron, definitely what's going on right now. The lockdowns, the amount of infections and deaths and all this stuff. Not good. But the real thing is the rising rates. I think that's the biggest concern here. So if anything is going to pop, this long-term forming, I would say, bubble, in my opinion, and I'm sure many people think the same, because it sure looks that way, not just by the chart, but also by a lot of the PE ratios, the price to asset, price to book ratios, so many other factors, so many companies that are worth tens of billions of dollars or hundreds of billions, and they don't even make money. Like Rivian was over 100 billion, I think, or so, and it's like they never even made a dime in money. So it just doesn't make sense. All these cryptos, looks like the crypto bubble is popping too. Can this continue forever? Some people think so. I don't. Unfortunately, not everyone can be rich, and the bears have their time too. And you got to play both sides. Right now, the bears are in control. I think they will stay in control over the coming weeks to the coming months, but we shall find out soon. I'm going to end this video here. Thank you for watching.